Hey guys, Akil Stokes here. Welcome back to another episode of the Trading Edge video, the weekend edition. I'm a Forex trader, trading coach, and one of the co-founders over at tier1trading.com. And this is a weekly video that I do, giving you a look around the markets, showing you the best opportunities that are on my radar. Now, this week we're going to do something a little bit different, mainly because there's nothing long-term that I have on my radar. There are some short-term plays for intraday traders, and we'll take a look at that during next week's workshop. But as far as the longer-term analysis goes, there's really nothing of value that I can give you. So once again, we're going to give you kind of a bonus session, and I want to take you in a conversation that we had with our traders and showing you the power of money management. So just to get you kind of caught up, each and every week on the Tier 1 platform for our premium members, we have a Q&A session where it's basically a small group sit down where we discuss any questions, comments, or concerns that traders on the platform are having. It is by far the most valuable session that we have on the platform because it's a real hands-on educational type of environment instead of the live rooms, which are great, but we spend a lot of time running through practical analysis, but also looking for trading opportunities. So the focus is kind of split. And recently in the Q&A, there's been a group of us that have been doing a back testing slash strategy development type of project together. So we've been talking on a private group, kind of sharing ideas and making different tweets. And what happened is we did a Q&A kind of giving a refresher, or I guess an update on what I've been doing and sharing it with the traders. And one of our traders brought up a brilliant idea that I never would have thought of. And it was more so about, instead of making a tweak in the actual strategy of maybe adding a filter or changing target projection or rolling stops, how about we take the numbers that we have, take the results that we have, and just see what it looks like if we implement a different money management type of strategy. And I initially didn't think it would work just because I've got a lot of experience testing and failing and testing and failing, and I usually have a good feel for what type of filters will work and what type will not. So I never even thought about it because I assumed it wouldn't work, but I said, you know what, let's try it. And the results were pretty decent, and it's certainly something that we need to look into going forward. So what I'm going to share with you today is the implementation of our numbers onto our money management spreadsheet and showing you how really different money management styles affect your trading results, meaning what the numbers can look like if you're super aggressive, pros and cons, of course, what they can look like if you're super conservative, and really give you guys a view, for you guys that are just starting out, of what the end goal looks like, right? The money management really is the icing on the cake. I tell traders, first and foremost, it doesn't matter until you're a consistently profitable trader, because if you're not a consistently profitable trader, all you're going to do is blow money regardless. But once you can extract consistent profits from the market, then that money management strategy is what really makes a difference. And that's when you can start to see some of the insane returns that you hear about on the internet. However, obviously in a responsible and safe way, or at least I would hope you do it. So here's a look inside the spreadsheet. I hope it doesn't confuse you guys. Basically, all we're doing is showing you what it looks like to kind of tweak money management after you already have results. And of course, if you haven't done so already, make sure you sign up for our Ascension workshop. It is happening on Monday. It is a 4-day workshop. It is free. It is online. You can watch the recording. Just make sure you register. You don't want to miss it. We're going to talk about a lot of concepts of how to become a consistently profitable trader, how to become a consistently profitable businessman, right? Or woman, because we always talk about trading like a business. And we're going to walk you through that process from the ground up, starting with the very basics of technical analysis, going into developing a rules-based strategy. All right, so sign up, go over to www.tier1trading.com. I will see you Monday in the workshop, and I hope you guys enjoyed today's video. All right, guys, welcome back. Just ran the numbers through a spreadsheet here, a money management spreadsheet here. Just wanted to show you guys the difference. And well, it's a little bit after the recording for me, but for you guys, it's right afterwards. So you should know how we ended things, making really comparisons to a fixed percentage, which is the traditional rules. Tobias had the idea of doing a fixed position size, and then he had the idea of what would happen if you threw it through a money management spreadsheet. So just to remind you, the fixed percentage, this is for that euro yen, so my best performing pair. The fixed percentage ended up at about a 52% return. The fixed position size ended up at about a 62% return. So you can see this here on your left-hand side. Again, when percentage goes down with the filter I added, it's about, I think, 30-something percent. So a lot of red numbers. But again, mainly what you're looking for, what I'm looking for is percentage changes. The thing we want to worry about is massive drawdowns. So you can see a lot of 1%, 2% losses. Is a 3% loss. I don't want to see any big stinkers in that loss column, which there isn't a lot. And what's interesting is that as we got to the time of low volatility, using a fixed position size actually sometimes put you underneath 1% as well as far as risk goes, which was interesting because you're going to have some of those pairs that have a really low ATR where you would have traded maybe double the amount to get to that 1%, and now you're trading less than that. But no red flags over here. Right-hand column, this is going to be the money management with a very conservative delta. Remember, delta is that multiplier, so just a 0.5% or 50% delta right here, 5,000 off a $10,000 account, and you can see that what it does is it boosts the total equity from 62 to 75. So we essentially went from 52% to 75%. In making those changes. Now, again, what I want to do is I want to run through a lot of red, which is, if you're going to trade this way, you have to deal with it. But 6% hit right here on it, and this is a trade by trade, a single trade. So that's going to be a big one, 6%. That's the biggest so far. So that's kind of a standout. Looks like that's probably the only one. So I would be comfortable with this. Not saying that I would like a 6% hit on a given trade, but out of 158 trades, one did that, so it's not too bad. Now, the cool thing is when this is the value of money management and having that conversation about how it could increase your more aggressively grow your account is you get funky with it and you do something like a very aggressive delta, so 1,000, right? And you can see now you've gone from 75% to 441% return. Woohoo! However, obviously you guys know that's kind of not too realistic because, again, what we're looking for is that main drawdown and there's that 6% one, which is going to end up being a 21% hit. And I don't know about you, I'm not comfortable taking a 21% hit on any given one of my trades. So that would definitely not make the cut. So you keep playing around with it. And this is what we're talking to, again, we're talking to Lawrence about this the other day about me and Tony were about kind of finding that middle ground. Once you have the numbers, right? Once you've done your back testing and you have the numbers, then you can do all types of incredible stuff because you have the legit figures. You have those predictive measures, right? You can make those assumptions once you have the numbers. So you can let's try another one. Let's try a quarter. So let's try 25. See what that does. Well, takes it down from 441% down to about 135%. But let's see what it does to that big drawdown. Again, most of them are still in the ones, a couple twos. Those are all fine. This is 8%. So that's that big one that stood out. This is going to be now an 8% hit. Let's see if there's one more. I thought there was another one. That's an 8% hit. Let's see if there's another one here. I don't think that was the big one. I guess it was, right? So out of all your trades, you can see most of the losses still remain between that 1 to 2% risk, which is not bad. I think, again, some of these can be lined up. Here's another 4%er, so there's a few outliers. But aside from that 6, there's none really that stand out. There's no 21%. So again, you would keep playing around with this. We're not going to do this forever because I'm tired. I do want to get this recording out to you. But you can play around. Maybe you can go 2,000, right? And you can see that increases it to 191. Again, look for those big drawdowns. Now you're at a 12%. I don't know if you want a double digit on on any given one. So probably want to avoid that. But you can keep playing around with this forever. But it does look like the money management or putting in a smooth ratio money management strategy is going to help with the profitability. And again, if you do it the right way, if you're conservative enough, you're not going crazy with your numbers, you can do so at a way that doesn't really give you any extra added risk. Again, you can see there's that 8% one right here. That's the big one. But aside from that, you're not really putting yourself in a position where you're going crazy. So interesting, interesting, Tobias. I'm glad you brought that up. I didn't even think about putting it in this format because of I assumed there were some big initial stop losses, so I assumed, hey, it would never work with that type of risk. But it actually works. It works pretty good. And again, we basically doubled from the initial. If I can, do I still have it up? The initial 52% return right here. Right? Come on, baby. The initial 52% return. We're actually able to double that just by implementing kind of a different position sizing model and some money management. So not bad. Now again, the key is this was on the pair that performed well for me. It would be interesting to see how this performed on some of the other pairs, and I'll probably personally do that myself to see if it makes a difference. But maybe it's a light at the end of the tunnel. It's something new for you guys to think about. So glad you brought it up. Hey, that's the power of having kind of this group atmosphere, because I never would have thought of doing this, but you guys kind of planted a seed for a thought, and then we see what grows from it. If it's something that works, maybe it's something that is usable. If it's something that doesn't work, you throw it away, right? But I appreciate you guys for that. I'll get the recording of the full session up. It's going to be a little bit because, look, you're hearing this after it's recorded, so I'm just wasting time. So I'll get it up for you guys, and I'll see you guys this week. So I hope you guys enjoyed the video. Remember, make sure you sign up for the Ascension Workshop this week. We're actually going to teach you the strategy that I just showed you the numbers for, so it'll be pretty cool to kind of put things together. You kind of get to see the end result already. Now you get to see what goes into achieving that. But just head over to www.tier1trading.com. Sign up. It's free, and I look forward to seeing you guys there. All right, take care.